So this is the checklist with all the information we gathered going through each of these stocks. You can see the list, the name of the ticker on the side here with the results for everything that we tested. Now, only 4 companies actually passed my test, are companies that I would probably invest in. And this is this one here, ENPH, PYPL, and PTC, and one at the bottom, OLED. The price that will go into each of these companies are listed here. So 185, 230, 127, and 243. Just to make it easier, I've grayed out the ones that I'm not going into and highlighted the ones that have potential for growth. Let's look at each of these companies in a bit more detail. We're starting off here with ENPH. We identified that it passes all of the checks. It's consistently going up over time. It's having a few bounces that we're happy with, and the price is currently sitting on the support line. It has about 25% potential growth that it will rise from support up to resistance. Okay, so this is one we're going to plot and watch the growth of this to see if we can actually make a return. The next one is PYPL, PayPal. Again, it's passed all of our checks. It has 2 levels of charts here. So you can see that there is a support line here, and in the middle there's another support line. The charts looks pretty impressive, and it looks like there is potential for growth as well if the price returns back from the support line and goes in an upward trend. If that does happen, we can actually plot to place a bid when it reaches $230, and the potential growth is up to about 14%. Next we have PTC. Again, it was going up in the upward trend historically. We're happy with that. It's been hitting the resistance line and the support line consistently. It's currently come out of the support line here, but if it goes back up quite quickly and catches back to the price that it should be at the support line, we'll place a trade here at $127. So if it goes back up and meets that price, a bid would be triggered, okay, and we can anticipate a 10% growth from the support line to the resistance line. And last we have OLED. Historically, this company's trend has been very consistent, hitting the support and the resistance line consistently. It's actually come out of the support area here, but if it turns as a U-turn and goes back up to the support line in an upwards trend like it has done several times, we can place a trade here that automatically will kick in at $243, and there is a potential 10% growth if it triggers that price there. Let's quickly go back to look at the checklist. I've inserted the information here, you can see on the slide, into an Excel sheet. The Excel sheet will be used to plot the performance for each of these companies. Then we can actually see which one of these are making money over time. If we're happy with this, we can then start to place real trades. Here is the information in an Excel sheet. You can see it has a list of all of the tickers of the companies that we analyzed. If it had a all-time historical trend, 2 upward bounces or more, higher highs, higher lows, what the potential growth was, and the price that we would set a bid for if we wanted to go into that trade. And also, that wasn't on the slide, the number of stocks that we would buy for each of these companies. So the companies that we highlighted that we're going to review the performance of are these 4 here. Let's just put those in bold so it stands out. And let's place the amount that we would want to trigger a bid for once the price hits that amount. So this one here, no, it wasn't this one. Let's take that one away. There's that one, there you go. And $185 we want to set the bid for, 230, 127. The last one is 243. Now we're going to place how many stocks we would want to buy. So I'm just going to say one stock for each of these companies. So one, and you can see here the total cost for this particular trade is actually one stock, which is 185. So one for that, one for that, and one stock for that. If we want to place more, say 666, let's go crazy, you can see that the price will relate to or refer back to how many stocks we have bought. So let's just do one for now. Now, a lot of these companies that we're looking at, it hasn't actually gone past support and gone upwards. So as soon as it does, we want to plot what date it was. So let's just say it was the 28th of Jan. And it's the 28th of Jan for all of these. Okay. Now, after a week's time, we want to go back into TradingView and check out how much each of these stocks are in a week's time. You don't have to use TradingView. If you've got an app on your phone or your tablet, you can easily go onto one of the stocks apps to find out what the price is. All we want to know is what the price is a week after the time it's actually hit that price. So let's say the first week it went up to 190. You can see that you would have made $5 in profit. The percentage growth would have been 2.7. So go for the next one. Let's say that was 240. That would have been a 4% growth. So the next one is just, we're actually plotting some fake numbers in here just to show you what this sheet will look like once populated. And the last one here, let's go to 50. So in total, placing a trade, if these actually met this price, okay, if it went upwards instead of going down, it would be automatically triggered if we were to place a trade on a platform. But now we're just plotting this out in Excel for training purposes. The idea is to make sure that our analysis is actually always on track and that we can actually make money before we start to actually go into the stock market and place real money. Last thing you want to do is start to trade without understanding the strategy and lose money straight away. Okay, so hopefully this will prevent that from happening. So the total amounts that you would have paid to invest in all of these four stocks is $785. If these figures were accurate, you would have made $28 in profit in just 1 week, and that's a 3.57% increase. Let's look at week 2. Let's say that the price continues to go up, and it's now at $200 for this one, and let's say this is 250, 140, and this one here 255. Now you would have made for this one here $15, $20, $13, and $12, and these are the percentage growth. Now what this does, it refers back to the original price you placed the trade at, okay, and what is the growth from the original price. It doesn't look at the previous week. In total, the second week you would have made over 7%, well 7.64%, and would have made $60 in profit. Okay, let's just quickly add in some dummy data for the next 2 weeks. So let's do 210 to 60 and 155, and let's say this is 260. Okay, so in week 3 we would have made $100 in profit. In total, that's an uplift of 12.74%. Let's finish off with the last week. Let's say it's gone down, so it's gone back down to 200. That one there, that one is 70. This one's gone down a little bit. Be a bit conservative here. And that one there, so it's gone up a little. Okay, open this up a little bit. Again, would have made $100, and that's the same percentage increase from the previous week. In order to make these numbers look a bit different, let's just change one of these numbers here. So let's go crazy. Here we go. So you would have made just over 15% profit, and that's $120. In the second tab here, you will see all of the numbers that we've put in, and we can just tidy this up and get rid of the blanks here. Okay, so you can see week 1, week 2, week 3, and week 4. And the third tab, it will have a chart plotted out. This chart will help visualize the performance of the stocks that we have analyzed. Each week, we want to make sure that the price for each of these stocks that we have analyzed is going in an upwards trend. If you repeat this exercise for a couple of months, going through each cycle, each weekly cycle, plotting in the price for each week, and you're consistently seeing the prices go up over time, you're on the right trend. If you're unable to see the price going up over time, and from week in, week out, it's going down, and you're not making an overall return, I would actually go back and review your analysis. You don't want to place any money in the stock market until you are consistently making money using this chart checker. So let's go back to the list, to the first tab, and I'm going to remove this dummy data. And what I'm going to do, I'm going to close this now, and after every week I'm going to check the price if it's actually met the price that I would want to place a trade in. So that means if the price has gone up in a period of time, I will actually plot it out for each week and then come back to see what the results look like.